This is Dan Max at eXp Realty, aka the Trading Agent. This is a live market chat for Wednesday, April 12th, 2023. Let's get into it. Hopefully you're having a good day. If you have any questions, please leave a comment. Please drop a comment in the Discord room. Feel free to ask. This is going to be an open chat, but I want to talk about some of the things I'm watching and just in general what to expect from the CPI data. As of right now, the CPI data continues to get revised up every month from the previous month, 0.1, 0.2. Well, you know what? That happens. And again, it seems like what the perception is that the numbers are coming in better than expected, but I personally think the opposite is true. Inflation is getting sticky. If you look at the actual individual numbers, as we talked about in the Discord room, it's tough to tell. Now, again, I think it is coming in lower over time because the economy is slowing, but the Feds are at this position, right, where they're stuck. Do they raise rates to try to kill inflation, or do they try to be market friendly and inflation sticks? Personally, I think the solution, as I've said many times, we've talked about, essentially what they should do. It makes sense that they want to get money to come into the dollar and they're going to want money to come into bonds. And now people don't want to hear that, but there's tons of liquidity out there. We've talked about there's lots of liquidity. And I think that's ultimately what their goal is going to be to do. It's not to prop up the market temporarily because, again, the midterms elections aren't till next year. So people have very short memories. I think their goal this year is to try to stamp out inflation and then give the victory to the prevailing party. Whoever wins the election, they'll say we can do better and blah, 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 whatever. Same old crap. So at this point, again, I still think that there is a bigger market correction coming. It's just a matter of when, not if. Seasonality, bulls, I mean, again, you can argue for everything. But as of right now, this is what makes this tough, is in a bear market, it does not go down the whole time. People are very naive to that. It's a trader's market. Very naive to the fact that it is a trader's market. And you have to pick your moments. Again, people are like, why are you shorting tech? Because it's up the most and it has the most to lose in inflationary times. Again, if you haven't watched my 2021 Who Wins the Tech War video, it's very clear who wins. It is very clear, okay? It's not tech. Input prices go up. Their margins go down. Remember, tech by nature is deflationary, right? Keep in mind, that plasma TV that once was $4,000 now sells for $400. Well, if the cost of materials continues to rise, their margins thin, and then they have to cut prices to sell and compete. It's a mess. It's an absolute mess, and it's a repeating cycle. It's very easy to see. It's just a matter of when, and that's the thing people don't realize. Like, if you didn't start trading in the 2000s, you remember when tech names, if you remember that cycle, literally people come on CNBC and they'd recommend Microsoft for 10 years and went nowhere. They recommend certain tech stocks, went nowhere. Absolutely nowhere. And then what? Right? Nothing. I mean, and that's the thing. People don't realize that. Like, they don't understand how momentum switches. And I think this, again, think about some of the tech names. Everyone's like, oh, they're up huge off the bottom. Well, yeah, because they got absolutely crushed. Well, if you study the past, that's typically how a cycle goes, right? You drop hard, you pop, and then the final death blow, and then you go nowhere. These strong rallies in these tech names is not how you bottom. The bottom is a prolonged, sideways, dead cat move where people give up on the stocks. You don't see people wanting to buy names in the bottoming process. Keep that in mind, right? Like, that's how you get rid of all of the hot money, stupid money, people who aren't. People who need to be shaken out. Like, think of gold in the mid 2000s, or sorry, 2013 to 2018. Nowhere. That's what happens. Now, again, how many years does it have to last? You don't know. Now, again, all that can be changed if the Feds go uber QE and we get hyperinflation. All stocks will rise, but I'm not betting on that until it confirms. And people are like, how would you know it confirms? Well, it's very obvious. The market will take out new highs and go. We're not there yet. I think the Feds have, based on what I interpret from what they're doing, they are very cognizant of losing their status as the premier reserve currency. Obviously, there's competition, but they're not going to go out with a fight. Keep that in mind. Think about every time anybody has tried to use anything but the dollar, we've either created a war or done something to decimate the economies of the people who say don't use the dollar. So to think that's not going to happen, and we're not willing to like kamikaze torch our own ship to try to figure that out, again, that just doesn't seem logical to me. We'll see. I could be wrong. I've talked about this many times, but I think at this current process, inflation anchoring in, you'll have the Fed minutes here shortly in a couple hours. They're going to say they're very much concerned about what? Inflation. Because unemployment is at levels that doesn't, they're not too concerned about that yet. And obviously we know it's picking up. It's picking up rather rapidly. The economy is deteriorating quickly on many macro scales in the interpretation of the data that I see. But when does that show up in the GDP numbers? When is the data? It might not be for a couple more months. Might not be till the May or June data. Just keep that in mind. So as of right now, the Feds are in a pickle. So let's start with what I'm watching. It's not natural gas. God, every day. Oh, I just got to buy natural gas. For folks who think it's going to go rallying back up into the 9 or 10 level, are high as a kite. And excuse my language if I'm trying to sound like I'm being mean, but unless inflation rages higher and the Feds cut rates very quickly, again, that's what we talk about. The best time to buy commodities will be when the Feds pivot. Natural gas could go nowhere. And if you're frustrated by the market, you might be frustrated by natural gas because it could just do this. I mean, if you want to trade that, a dollar move in between and however you want to leverage it, just please be careful with the UNG. Let's check at the market. Fed Tool Watch. Where are we at as of right now? 72% likelihood that they will raise rates May 3rd. Keep in mind, this is beyond, and again, remember, it changes rather frequently, lots of times during the weeks and days. Anything over 63% is a confirm they're going to do it. Just keep that in mind. So what are we watching? Good old oil. Is it breaking out or is it retesting the next level? Good question, right? Good question, because this has got to put the Feds in a pickle, right? Oil rising? No me gusta, no me encanta. Yeah, they don't like that. They can't be sitting here going, well, we think inflation is now coming in, but oil is now at $83 a barrel and rising. OPEC's cutting. OPEC, and this is the thing we've talked about. It's the same reason why, like Meta probably, dead cat bounces when they say they're going to lay off everybody, essentially. Same thing with oil, right? As it's down, they announce big, supply cuts, try to float up price. But the problem is you don't cut your supply unless what in your visibility is not looking good in the future. It's called demand, right? And again, you want to argue about green stuff. To me, it's more hearing major reports about the Asia gluts and diesel demand slowing everywhere. Yeah, right? The only thing that is sustaining, and this is why I think this is a benefit for oil, again, why we will like oil as a monster trade at some point. And Banff, I agree with you. The U.S. has to fill SPR at some point. So it allows them to create a higher floor. I don't think if we get a major recession, you're going to see oil go back to negative futures prices. I don't think that's in the cards. That's kind of what OPEC is trying to prevent. What's the floor? We've talked about the 60s level. As of right now, that's the level. Could we violate that temporarily if they throw the baby out with the bathwater, everyone freaks out, everyone goes nuts, and just starts liquidating? Absolutely. Nothing's safe. Nothing's safe. Nothing's safe. I repeat that, but I feel like people don't really understand it because they don't have history of understanding what I mean by nothing safe. When the VIX explodes and the market dumps, nothing is safe. Why? Think about it. Hedge fund redemptions. Institutions, mutual funds have to sell stocks, winners and losers. People are calling for their money at all these different institutions trying to get the cash. Well, guess what? They blanket sell everything, pensions, whatever, you name it. The average person's 401k, again, it creates selling pressure. And selling pressure, now again, there might be some things like 1 out of 100 things that are immune to it. But in general, that's what you should anticipate, is that liquidation is created from the effect of VIX spiking. People are emotional. People are irrational. People throwing the baby out with the bathwater. Your favorite names, you'll grab a net and you just sit there, and they might go lower than you even think is possible, but you're in the phase of capitulation, and you either set your stops and then rebuy, or you just say, all right, I'm going to start layering in at X price, and just know that in time, if you're buying, again, in my opinion, commodities, you'll have the best rises in time. So watching oil, obviously, FedWatch tool. Let's get back to the market. Watching like a hawk the IWM. So we talked about the IWM lagging leads. It lags. Well, it's leading the market, right? Remember, small caps are a very good indicator of economic growth, right? Right. The smallest companies means credit's flowing, everything's going well, people are anticipating growth, small businesses are going. All these little things that should do what? Pull the market higher, or pull the IWM higher. Well, we've talked about watch for lagging. Well, look at them apples. Asia be lagging. And when we say lagging, Asia, kind of like joking, that's the reality here, right? Like, keep an eye on it. Like, if you're looking at the IWM and you're a full bull, which, again, I anticipate most people are, you better be careful here. We've talked about inflection points. We've talked about in time, and this is what's so hard. In time, right? Today, is today? Let's talk about that, because that's where I was keep telling. Like, could today be a bull trap? Well, what do you look for in bull traps, right? Do you guys know? Does anyone know? I'm just curious. Does anyone know what we look for in bull traps? Anyone around? Bueller, I'll give it 2 seconds. If not, I'll just get it. Do anyone want to? Because, again, I've done a video on this. I try to get people to understand how this works. And it's not rocket science. But there is, volume is one of it, because you got to trap people. But the price action. The price action is really important in bull traps and bear traps. And usually it revolves around news, potentially, right? So, like, pull up the cues, right? Going past the expected. That's part of it, yes. But, going slightly higher, going slightly lower, but wicking and trapping the sentiment. Because 99% of what the market makers are trying to do is to get people to buy high and sell low. So if you have that psychology understood, like I was watching the Q's post on the 10-minute post CPI, I was like, zinc. I'm like, if that ain't a bull damn trap, then I don't know what is. Look at the wick on it. And then it's and then the rest of the thing, pre-market, and then you got to the open here at 7:30, and it's like, goodbye. Yeah, wiki. It doesn't have to always be on the daily, like we talked about. Like, it can be on the monthly and weekly charts, like they can line up. Right? Let me see if and again, is this really a trap? No, it's just more like showing the cues, lagging, watching that. Like, here's your wick, filling the gap. Trap. Right? The wick's at the top of the candle, but the price action is what you're looking for in the sentiment. I don't know how many people on the Discord room noticed that I was talking about, like, hey, did you guys see the sentiment around, whether it's Wall Street Bets, Stock Twits, Twitter? People were screaming 420. Now, again, I know a lot of 420 reference to marijuana, but everyone's screaming, we have to go to 420. The market's about to rip higher. I mean, I'm seeing what I consider the biggest, I hate to call them fish. I mean, what's the best way to describe someone who has a huge following on social media but doesn't really seem to know what the hell's going on? They're just popular because of maybe their comments, right? Those folks were going, bought Tesla pre-market, bought Meta pre-market, buying Apple, buying tech. It's like, huh. Okay. Remember, the same tech that's been leading up but lagging as of recently, right? We talked about this. So many people got very frustrated with NVIDIA, which, trust me, I get it completely. But if you traded Tesla and you saw that short in 2021, this is a baby in comparison to that. The move in itself, irrational. We all know it, right? But what does the move do before it turns over, potentially? And this is, again, potentially, not all the time. Sometimes the stocks will act somewhat rational. You got to draw in every person, potentially. Now, what price action does that create? I mean, that's where we talk about the repeating patterns, typically blow-offs. Now, if I would be remiss to say, well, this Fed Day action, I thought was the blow-off in NVIDIA, right? It looks very blow-off topish. Like, you see that candle 1,000 times, 99% of the time you're going, that's the top. Well, look what we did. And some people were talking about this too, head and shoulders top. And we talked about, All right, just made a slightly higher high, really get everybody in. And now what? We're right back at the range lows. Watch the 20-day. Adios, amigos. Right? Watching NVIDIA. Because think about this whole AI crap. And again, it's whether it's 3D stocks, Bitcoin stocks, miners. The market's really good at creating a narrative to draw people in. And they push the narrative the hardest at the highs. And when they want to buy it, they push a negative narrative at the lows. If you remember gold, say, like in October, right? Gold, dead. Miners, dead. Gold, dead, dead. Right? Well, then it rallies. Well, think about the opposite with NVIDIA. Well, I'm like, if you've got time and you can be patient, you're going to love your tech shorts, right? You're going to love it. So, question. What's up, while we're at Lab D? Man, we've talked about XBI lagging for a while. I don't know why you wouldn't just short tech, like tech. Now, I understand XBI and bios have been lagging hard. Could it get down into the 60s? I see the logic here, but man, I don't know. And this is what is always ironic to me is the people are the most scared to take on the biggest potential trades here, well, especially when it comes to tech. Like, you see, pretend like this is the Q. Well, again, I can't line them up together. But if you look at, say, like the Qs versus XBI, yeah, XBI is lagging hard. So I get it. But to me, I'm like, I'd rather short the leaders that start lagging that will have the bigger moves, in my opinion. But, I mean, it's like a different version of the same trade. So, I mean, blessing-wise, I understand it. I just don't, I think there's more potential in shorting what I would think financials, because I think they could get absolutely snapped. And then the fake tech leaders, which I consider, again, jokes. People paying whatever 160 times next year's earnings for NVIDIA. I mean, give me a break. And not a Kit Kat bar. But it makes sense. But this is where the thing is, like, think about it. At the lows and at the highs, what is the sentiment? Too bad some of the older folks who haven't been or have been in the Discord room are not around, but they remember this feeling of invincibility at highs, being tops, and then at lows, like total despair, total frustration, total just mental, like, I give up. Yep, price targets keep moving higher. All the buddy passes. We saw it all, Joseph. You're paying attention. All the buddy passes, all the upgrades, all the irrational. Because, again, brokerages know that they can sell their positions to their clients by upgrading stocks at highs. Right? They don't have that fiduciary responsibility. They don't care if you lose. Say you and I, Joe, own a bunch of NVIDIA, and we're Morgan Stanley or JP Morgan or Goldman Sachs, one of those brokerages, and we're like, man, are you good with this stock? Yeah, and like, dude, we bought this thing at 100. Yeah, we think it's a sell, or 110, whatever NVIDIA got down to. Yeah, oh, it's a buy. We think the upside could be back to new highs, and man, 3 years from now, we think this is a $500 stock. What crap? It's so scandalous. But that's what they do. So now today is the CPI confirming it. We talked about this rising into earnings. Earnings right now, as of the companies that are reporting, bad. They've on average missed by 20%. Now, again, I don't have that figure in front of me. It was something I pulled from one of the earnings watching social media accounts, and they were like, oof, earnings season not starting good. Even Costco. One of the things, Costco always has increasing sales. Like, I can't remember the last time they didn't. And their gas sales were down. I was like, Oh, really? Okay. Again, you see it with the trucking rates. All this stuff. You see it in the credit markets. I see it in the credit markets a ton. Tightening. Everywhere. Commercial space, good God. Like, if unemployment's expected, and think about it. Like, think about if you were writing commercial loans. Yeah, Walmart, Whole Foods stores, Target stores closing everywhere. Imagine if you're a commercial lender and you see what's going on. You're like, I don't think I want to lend money for commercial real estate. And if I do, I'm going to not give you a good rate. We have to assume you're going to get a crappy rate. And again, it's everywhere. It's literally everywhere. So if you have any questions, interrupt. If not, I'll continue to go through what I'm watching, just kind of what I'm noticing, what I'm eyeing out. But hopefully you're doing well, my friend. I think you'll be happy probably with your Lab D I mean, you probably picked it up probably at a pretty good time today when it popped. I just don't know if XBI has as much downside, but we do know XBI what? We know baby bios love cheap money. Cheap money. We do know that, right? Like that's all they do is just burn cash. Right? Burn cash, spend money, try to create the next future winning drug versus keep in mind you can't patent plants, you can't write patents on natural stuff. So that's why I always kind of laugh about the pharma industry. It's like, there's a lot of naturopaths out there and people laugh at that as woo-woo medicine. And it's like, well, why do you think the pharmaceutical companies write it off? Because you can't patent it. You can't protect IP from things from nature. Oh, did you know that? I mean, I knew that, but never really thought about it until the last couple of years. Wow, market's at the low of the day. Okay, where's Sabalina? Are you around, my friend? You said watch 409. I agree. Because we talked about, again, I apologize, into a live or a market recap yesterday. A lot of stuff going on in the Max household. Just trying to stay busy. Hopefully people were prepared mentally for anything. And again, as hopefully they saw the comments in the Discord room this morning, if you took some shorts or if you've been patient and you're just like, time is my friend, you're feeling good about today. Again, look at these candles. It's not usually a one-day event. Now it's looking like an M. Now it's looking like a head and shoulders on the daily, or like the bigger time frames. You zoom out, right? You look at the monthly, because again, this is what I always tell people, like, please zoom out, zoom out, zoom out. 20-month is curling down. You retest it, and you retest the fib. I mean, to think that the bear market's over, I don't really believe in that crap. Again, I'd like to see the SPY do whatever it needs to do. I don't care how it gets there. And I always kind of laugh about, I'm seeing how a ton of like naive traders are talking about the spec positioning and S&P futures being short. The last time it was this great was in August. And does anyone remember what happened in August? The market absolute tanked. Well, I know if I had to sell stocks, I would think a good bet would be to short the S&P futures. That would be probably a smart trade if I was an institution, knowing that I was going to have to start doing things to sell things or anticipating a recession. Then if I'm short the market and I decide to sell stocks, it's not so painful. People don't really think of it from that perspective. Again, in a bull market, high short interest, yeah, you got to be careful. But in a bear market, and again, cash levels, we talked about like cash levels, and posted this again if you're following on Twitter. Talked about people are saying the cash levels are high. I agree, they're high. Relative to what? The recent memory. Well, keep in mind, when interest rates go higher, you now have competition for cash. Think about the average person. I mean, I'm literally in a Marcus 10-month CD paying 5.05%. Again, if you want to use the link referral, you get 4.75 for 3 months on any of your capital in there, and then it's 3.75 after that. But there's competition for capital. I know a ton of people are like, I don't want to lose money. I want to sit this out and wait. Well, guess what? Getting paid 4% to wait, not a bad price to wait. People, again, feds want people to buy treasuries. Absolutely, they want people to buy treasuries. I'm telling you now, like, people are so naive to that crap. But where's the liquidity going to come from? Do they want to do endless QE? No, I think they'd rather get it from the market. There's trillions of dollars there too. Trillions. Wow, cool. I'm cool, buddy. I see your comment. Cool. I'm glad you got some of that shortiness. Hopefully your construction in the woods is going well. Remember that. So we'll keep an eye on the TLT. Let me see some comments. I got a question for smaller accounts. I have something like NVIDIA FSLR. I'm also able to grab 2 puts. Would you recommend sticking with one stock and being able to trade around those options? Ooh, the easy answer is always to have more options to trade around. That's my, because you have to be able to trade around your positions and options. But here's the thing, they get expensive quickly, right? If you have a smaller account. So the answer is not as simple as it is. It's just managing risk, being thoughtful, giving yourself time. And if you're wrong, this is something I think a lot of people probably realized. If you bought options in March and you had April, May timeframes, you had to roll out your options at some point. And so if you took some of those profits and traded around it or managed it and defined your risk, getting back in is not as difficult. If you just sat there with your hands up, crossed and your thumb up your butt, you're probably going, well, I need an absolute demolishment to come. And it's like, well, you just hope it happens to be in your time frames, because next week is OPEX. Just keep that in mind. Could the VIX spike, dump? Again, it's interesting when the VIX is at the lows going into OPEX, right? I don't play options traditionally short, so I have NVIDIA. Okay, cool. No, I mean, I like NVDS. Because again, I think NVIDIA, I mean, it's so... If you've ever been on the other side of these trades and you understand the emotions of it, and I'm just talking about in general, not specifically anyone, but you understand, like, at the highs, things seem inevitable to only go higher. And then at the lows, the market creates this perception that you can only go lower. And so this choppy action into what I would consider unlimited bullishness is telling you it's distributive. We talked about there's volume up here, right? That's distributive. That's distributive. Professional gap, a lower high. But it's so hard because when does it start? What was the cause? I mean, that's what everyone's trying to figure out, right? Like if I had a magic crystal ball and I could tell you and you could tell yourself that, it'd be easy, but we don't. We have probabilities in trying to manage what we think is going to happen. And that's all you really can do. And that's where trading gets so hard. It's where you have to just be mentally there and prepared. And that's what I was telling me, like, man, I'm sorry I haven't been around the room the last couple of days because I've been dealing with some personal stuff and family stuff. And it's like, it's a big distraction. And mentally trying to watch the market and be aware of it. Maybe I'm getting lucky here with the CPI, but watching the lagging action, I've said in my mind, just don't watch the paint dry, the grass grow. I think you're going to be fine. The CPI data as played out, I mean, think about all the perceptions of like, if it's 5.0, we're going up 2%. If it's 5.1, we'll be up 0.5%. All this stuff's a bunch of crap, y'all. Nah, you guys are my family, though. I mean, that's the thing. That's why I like to keep you guys informed of what I'm up to. But that's the problem here, right? Right? Time. To think that people... And this is what's, and we've talked about this, right? Like, you see all this lagging stuff, and it's leading to what? A blow-off top in the Qs. We talked about this candle being a potential topping formation. That felt like the top. Then you blow off, because we've talked about, here you go. Here are your big up candle fails. Well, watch the Qs. You take out the 20-day, because obviously you take out the 312, but if you take out the 20-day, coming off the high, I mean, I wouldn't be surprised if a waterfall starts. Think about all of the sentiment that is just absolutely trapped. Everybody thinks everything's great, but if you've been looking at the behind the scenes, like you lift up the hood, right, of the car, I mean, you can see earnings is going to be a potentially disaster. Remember, now the stock buybacks end too. You've got like the buyback blackout period. Got a lot of little things going on here that could be scary. So watching, let me get back to what I'm watching. I keep getting distracted. So watching the Qs, obviously. IWM lagging, donkey. Today's candle, not good. That is a bull trap. Potential outside reversal candle. If you break below the 8 and 10 day, you feel this gap at 175 and then you go below it. Oh, Dios míos. I'm watching the TLT because, again, I'm watching what's happening in the bond market. Now, what do we know could happen here? Again, if inflation's anchoring in, could bonds be sold? Yes. But if the market's going to slow, the economy's going to slow, and the Feds are going to have to pump rates higher, I've warned people this before, that the bond market will price that in before the Feds peak out, meaning hit their terminal rate. Well, why will people buy bonds before the Feds hit their terminal rate? Well, it makes sense. If people think that the Feds are literally raising to create a recession and slow down the economy, they know, because the bond market's playing in the future. Like, the bond market's playing in probably pricing May, June right now. Hence why it's basing at a highs here. Well, then rates should come down, potentially. And the Feds are going to get what they want. Money flowing into what? Risk-off assets, risk-averse assets, assets of fixed income. So that's where I'd be watching, the 200-day, the 20-day, this 106 area. Because right now, you've got a big choppy range, right, since November. Now people go, oh, lower rates, the market's going to like that. And it's like, do you remember the past? Because I do. Hopefully you do as well. If you're, again, check out the monthly. Rates went significantly lower in 2008, 2009. As what? The Feds were raising rates. Keep in mind, that was, right, 12. I mean, I don't think they're raising rates then, but the rates were holding up to pivot at some point because they thought the economy was going to go off. Well, I guess most people didn't think the economy was. I did. I thought the economy was going off because you could see it in the housing market. But point being is it would make total sense to me if people started rallying into bonds because that's what they wanted. They wanted money to flow in it. So watch that. The dollar getting pretty wide and loose. Retesting the range lows. This is an important area, y'all. Zoom out. You'll see. Watch this area. The VIX, as we've talked about, I mean, this is just it's a gift. Every time it gets down low. Look at the wick today. Makes a new low. Gets everybody thinking. Because, again, I was reading on, and again, this is why I love reading social media. People are like, oh, you know what? The VIX could go a lot lower. The VIX could go a lot lower. Okay, could it? Could it? Yeah, technically, sure. Right? The VIX could go, oh, all right, well. So you want to bet on the market continuing to go higher and the VIX to go, and continue to think the market should go higher based on just the VIX alone. And it has so much room to go, right? So much lower, right? Okay, and this is what's so hard. It's like you're fighting your own emotions, and then you have to kind of like fight off the demons that are like on your shoulder going, this and this and this and that and that and this is what's going to happen. And it's like logic. This is what's so hard about the market. If it was very easy and logical, everybody would be winners, but they're not. So let's keep going into it. VIX holding 1819. SPY, as we talked about, 412. QQQ, any pop, IWM lagging. Gold. Here you go. Again, baby out with the bathwater. We've talked about the gapping down. Now you gap up. Are they going to start tossing away gold? Keep an eye on it, right? The miners. Heck yeah, for the friends who are long it. Again, my dust calls, I'm not, $750 worth of exposure. Worthless, essentially. Okay, watch this action. Open high, close low. Now, people, again, I hate to sound like the bearer of bad news, but if you've seen massive VIX spikes, miners, literally went from 31 down to 16, 51 down to 16. How extreme is this potentially dropping? Well, again, could I be wrong and miners go to the moon if the VIX spikes? But remember, gold miners are part of the market indexes. They are part of ETFs. They are part of the market separate than gold futures, silver futures. Miners need credit. Miners are affected by the economy. Clearly, just be careful because they could get absolutely curb stomped. If they don't, I hope. Again, I always tell people, I'm always long gold. I have physical. But do I like trading the miners? Yeah. But remember, second quarter is usually not friendly to metals and miners. Just throwing that out there. So I'm watching that stuff. I'm watching oil, obviously. Oil, USO, taking new highs over the 200-day. Watching this area. Is this going to be another outside candle? Because don't be surprised if the market starts flipping hard down. All of a sudden, oil just goes, turns right around. Right back around. XOP. Again, Sam, if you're paying attention, I'm trying to warn you now. If the market peels like an onion, all of the oil service names are not safe. And then when you look at it and you zoom out, you go, damn, it's just back testing this old channel at the 200-day, 100-day area. How much more upside is there? Raise your stops. That's what my biggest recommendation would be. Raise your stops. UNG, I'm not really watching this. I'm just kind of laughing at it. Please don't buy it. Remember ExxonMobil, we've talked about this one. This is a big one in that sector. Keep an eye on it because it's reference monthly highs. Keep an eye on this. You probably watch the 114 level. If it takes it out, goodbye. Solar stuff, it's a joke, but popping around. Sedge, someone talked about Sedge 295. It makes sense to me, but on a pop. Keep an eye on it. All of solar. We talked about California is going to have to start cutting their subsidies because they don't have the capital. They still have to pay reparations to every person of color, $5 million. Is that what they were talking about in, what was it, San Francisco or something? That's interesting. That's interesting. Okay, be careful out there with that policy. But point being, I mean, it's if oil pulls back, commodity, now again, they throw a baby out the bathwater. Again, I think solar, for whatever it is, good to hear, Sam. Hope you're doing well, buddy. Yeah, I mean, have you studied what happened? Remember how we talk about ETFs? You know, people, why are people leaving California? Because the weather, it's too hot? No. Remember, ETFs come out at highs. We talked about that. Remember that? What was that new bull tech ETF? Again, another one at the highs. Look at the tan. I mean, it can go 100. I mean, it can cut in half. Rapidamente. So keep an eye on it. And that could take solar, obviously, all of it with it. Watching Apple, obviously, versus everyone calling for new highs. Look at Apple every day. Just slowly melting down. Melting slowly. Amazon, talked about, watch the 100s. How's that doing? Slowly melting down. Guggenheim. Now again, AIO, whatever. Is this not a double top now? This candle, you better watch out. If it breaks 105s. Meta, again, this is kind of a joke. I'm still amazed that people think this is a buy. This is like, like there'll be a meme one day. The MySpace picture of Tom at his computer looking over his shoulder. They'll be putting Zuckerberg's face on that, and MySpace and Facebook, Meta will all be very similar, in my opinion. But either way, like trading at 25, 20, 30 times future earnings when their growth is literally falling off a cliff. Instagram is dying as we speak. They are begging Congress to kill TikTok. It's because they're doing good. All right, we'll see. Again, I'm not usually a macro guy, but again, you zoom out on the monthly, weekly. You're at references. Just see what happens up here. Getting real tight up here. Real tight. Microsoft, congratulations. Because remember, we talk about dollar bottoming. Microsoft usually does not like higher dollar. Low off top. Watch 280s. Netflix, we talked about this starting to lag again, right? I mean, all these names look very similar. Hits the reference zone, backtest the trend line, turning sideways. But here's, again, no one's evidence-based. They're just listening to headlines going, oh, another day, another day, day 7,515 of chop, and the market's going higher. Okay. Well, the evidence is pointing that it's just a matter of when, not if. Tesla, same thing, pops up. I mean, this is a lower high. Dead money, right? SMH, your favorite, right? Or my favorite, short. Is this breaking the 20-day? We'll see. Keep an eye on it. Like things I'm watching. Talk about Intel hitting the trend line. So many things going on. Starting to back off, right? Nvidia starting to bleed. Watch the 20-day. Micron. Again, never understood what was going on here, but look at this action. Every time it gets up here, it's zick-bow. Turn right over. Right the hell over. AM Dizzle. Below the 20-day. Pops. Backing off again. Taiwan Semi. My favorite, personal. I think this one gets absolutely blasted. And if every threat by China just makes people gonna want to sell this more. Look at this thing. Back near the range lows. Turning over, question mark, we shall see. I mean, we've talked about some of the materials names popping, right? Caterpillar. All right, 20-day. See what happens here. It's slightly over it again. Talked about some of the materials names. Keep an eye on them. I mean, again, it's hard because I like ag long-term, but it's like waiting for the gold bottom. AA 20-day. Like, for example, I don't know if CF got an upgrade today. I could be wrong. Someone double-check me. Okay, cool. I mean, we talked about this could be a bottoming process, like a good time to buy. So if you traded down here and bought it on the recommendation or the idea, makes sense. But do I want to buy it now? No. Would I hold it? I don't think so, Tim. XLF, we talked about watch the 32s, right? Oh, it's over the 20-day, Dan. Well, okay. I'm not surprised that it went right back after the high volume references where? Up in the 32 level. All right, well, watch today's action. That feels very potentially outside reversal. If you get back under 32, essentially on the XLF, SpaghettiOs. I mean, that's kind of what I'm watching. HYG, again, pop today. I mean, we'll see what happens here. A lower high. That's got to be slightly detrimental, concerning. Right? The XBI, we talk about lagging. Your favorite, again, I always laugh at, I always have like ARC at the bottom, and it's like ARC is just crap. But look at that. Pops the 250 day again. Bang. Backing off. Said watch the IYT, right? Keep an eye on that. Can't get over what? Can't get over this box. Is this a lower high? Blow off? Your guess is as good as mine, ultimately, again, because we have the same probability to start, but I feel like the evidence is moving in our favor. Now, does the market have to collapse today? I mean, that would be the easy answer. That would be the hope. But again, I would warn people, if we drop pretty significantly in the next day, 2 days, maybe it's the bank earnings on Friday, right? Maybe it's the PPI tomorrow. Maybe it's the retail sales. Who knows why? The whys are so hard. That's why I always like people who focus on whys don't find them out until it's too late. That's if you're not familiar with that saying, there's something moves, then the why comes out. Keep that in mind. Like it's you would always hope. Wow, only 2 concurrent viewers right now. Seems like people are pretty busy this morning, but whatever. Figured I would do this since I couldn't do a recap. The why is hard. It comes later. So, any other thoughts, questions, concern? Discord room if you're listening. Let me see. It's in the main room. I group Drew is taking notes. Is rambling. Yeah, Drew was definitely talking a lot of stuff. I didn't really see what he was saying, but he's, I don't know. Everyone means well. That's my assumption. Let's go once again. NBA. Yeah. I see 28 viewers. Yeah, I see concurrent viewers, but it doesn't seem like there's too much interaction, which that's, again, I've tried to warn people the last couple weeks, like just don't sit around here and watch the paint dry. If you got your positions, you got your stops, you got your levels. I mean, talked about buying Soxus yesterday at 18.10. Was it yesterday or Monday? Man, days are starting to bleed together. Patience, adding trading around that. SQQ got a lot of that. Got some of the like longer dated puts on some Apple, Taiwan Semi, Nvidia, Meta. It's all tech essentially. So come on, Apple. Really want to see Apple turn red. I want a red apple, not a green apple today. That would help. But yeah, I'm here for you guys. And again, I apologize being a little MIA last couple days, but the people in your life that you care about the most, have also supported you. You gotta, help them out when they're having their tough times. That's kind of where I've been at, trying to work on that kind of stuff. Those that know what I'm talking about. But yep, market isn't perfect, neither is life, right? Saw a tweet a guy short, and he's not planning on doing much for the next 6 to 12 months. Yeah, see, that's the thing. I don't like saying 6 to 12 months, do this or do that, because you got to at some point take profits, right? Like, what's the eventual bottom? The trail to get there. And as I've always warned people, like, shorting is not a long-term thesis. Your shorting is trading, right? The longer-term thesis is to be able to buy and hold lows and trade around them. You can't stay short forever. I mean, maybe certain stocks that you think are going to the ground that are a fraud or a fake. Okay, I mean, I can understand that. But still, even then, along the way, it's, is there a better opportunity out there? That's always like the conundrum. How long do you want to stay short? I mean, I saw people stay short from 2008 to 2012. It didn't really work out. Saying, well, because again, the data was still bad. Things were what I would consider, the economy was in that bottoming cycle, but the market obviously priced in the worst case scenario. When the market went from, what was the highs? It's like the numbers are pervading me. I know what the low was, a 666, but And it was like 160s, something like that. Yeah, 150s, 160s down to 65, 66 on the SPY. I mean, that's pricing in a lot of bad stuff, right? Because that's the thing. The economy and the market aren't the same, right? Like GDP went to like negative 6 or 7%, but the stock market dropped 60, 70%. Like, that's not logical, right? Well, pulling back 20% off the highs as the economy goes into a recession is usually a typical, buoyant, that's an area. But, me personally seeing what I've seen, I think it's very obvious that this isn't just your normal pullback, ultimately. Like, we've got structural problems. We've got inflation problems. We got people running the country and companies like idiots. People have gotten, the sentiment from stimulus of COVID created like this all-in effect. Well, it's no different than any all-in effect, is that you usually have an opposite and equal reaction, meaning you're going to drop significantly to an extreme of pure panic. Like, the opposite of pure joy is panic, right? When? Good question. That's the hard question. If you can tell me, and again, if you're from the future, that's cool. Yeah, hire people to run the FAA who never flew a plane. I thought, what was I watching? Something. They also had some person they're interviewing about something, and it's like, these people, I mean, they're literally, and again, I'm all for equality, man, and giving people opportunities to like succeed, but you don't do it at the cost of putting in people in power just because of their race or creed that don't know what the hell they're doing. Like, that's scary as hell to me. Putting people in positions to make decisions that literally have no experience. It's why I hate how 99% of politicians have never run a business. They've never managed a company. They've never managed people. They've never done anything other than rally people to vote for them in an election. That's not real life experience, in my opinion. That's like a popularity contest. That's not how you run the country, through a popularity contest. You run a country, you run a business, you run things based on what? Experiences, making hard decisions, not kicking the can down the road, being decisive, and also not being short-sighted, right? Like, that's the problem with, again, we talk about politicians, right? Is like, they're always trying to win the next election cycle, win the news cycle. Well, you just can't always grow. You can't always, like, trying to win that at the cost of the future is a massive mistake that ultimately will come back and bite people in the butt. I mean, as much as people hate some of these China or Russia, I mean, whatever their like, again, it's not really to be popular or pop, but at least they run their country from the perspective of long-term thinking versus the next election. Again, don't agree with any of what they do, but that's how they get shit done. Yep. It's hard. It's a hard conversation because, again, it's like, I've always said this, I like, the best usually policy and legislation is when both sides don't agree and they have to compromise. Because no one, again, right, red, blue, whatever, left, right, the world isn't black and white. It's gray. There's a lot of gray areas. You don't know what, and again, unintended consequences, all sorts of crap. Anyway, let's go back to the charts because you can go down this topic forever. What's Bitcoin doing today? Because I saw people talking about that. I'd like to pull that one up. Yeah, it got into the 30,000. Whoa, look at that. The top of our box. And why is this box drawn that way? A lot of references. Yikes. Okay. Here's something I'd be paying attention to too, right? Because, sometimes I don't trust Bitcoin, just like I don't trust gold, right? Like gold, when you see tons of commercials on TV for gold, buy silver, buy gold, buy 401k gold, buy for your IRA gold, blah, 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 blah. And it's like, why would they be advertising so hard for people to buy gold at the highs? Right? And now Bitcoin, like, the pumping is pretty strong up here. Now, again, I'm on social media. I pay attention to this stuff. Everyone's calling for a rip higher. The next halving cycle is next year. Bitcoin this, Bitcoin that. We will see. You're at major references in this green zone. So if it doesn't, oh, hey, cat. If it breaks out so be it. If it doesn't, be careful, because it could, again, baby out with the bathwater. Never forget that reference. When the VIX spikes and the market panics and people freak out and they need capital and credit freezes and they don't know how to pay their bills and people need to go to the extreme to get their money, nothing is safe. Not even, I mean, gold it has and can be at times, but even then, sometimes it gets liquidated. And you'll see it sometimes within the CME. They'll raise their margin requirements at highs. Say the margin requirement is, for example, 15%. They'll double it, triple it, up to 20, 30, 40, 50%. And then what does that do? That makes people have to sell their gold to get to their requirements for margin. It's pretty much it's like their fail-safe to like try to mark down any commodity if they really have to. And it's the same thing in the stocks, right? Like imagine when brokerages are super bullish, they don't care, but as soon as they get scared, right, they're going to start charging higher rates for margin on particular stocks that are either highly unliquid or highly highly speculative. Choose your words well, Dan. So, any other thoughts, questions, concerns? Here for you guys. Hopefully, again, I'm watching the market, watch the IWM, watch the bond market, because again, I'm really genuinely concerned to see what happens here, because if inflation is tampering like they try to pretend, again, it's 5% plus for seems like years now. I mean, people at the pump, people at their day-to-day thing, how many people actually think when they see the CPI go down to 5% feel like the economy is getting better and that somehow they're saving money now? I feel like the opposite. All I hear is people complaining constantly, like, prices of this have not come down. Well, now maybe the price of gasoline's come down a little bit. All right, that's cool. But prices of certain foods, certain services, for example, good luck trying to get anyone to do anything for cheap, right? Housing cost. I mean, everyone's talking about this housing crash. I'm hoping for one, but I'm not seeing like a major crash at this point. Not seeing that. Good, again, because we have a shortage of inventory. This is the problem, right? When you have shortages of inventory, low supply, demand that obviously fluctuates, but when your supply is so low for so long, demand builds up though too, right? Like people have to buy a house, or they have to move at some point, or they can't afford something, they need it. Think about all the different reasons why people have to buy certain necessities. They can only put off that purchase so long, and so it's like the U.S. having to buy oil for the SPR. Like you can push that off for as long as possible, but that's always going to be in the back of producers' minds. That, okay, well, we can cut our supply, but we know there's an underlying demand that builds up over time because it's a necessity, right? The suppliers have gotten pretty damn smart. Different times, friends. All right, any last thoughts, questions, concerns? I'll wrap it up. I appreciate everybody. Hopefully everybody's, again, I know everybody's not doing well. I mean, that's the hard part in trading. Like, everybody can't win. It's a zero-sum game. I just hope people are learning, being thoughtful, knowing that if you have options, please don't have 100% options. Like, don't bring your whole trading capital into an options account. Trade stock. I know it's not exciting, but leverage ETFs or, learning how to trade stocks and understanding, because that's the thing. Like, if you put option knowledge to good stock fundamentals, it's easier. But this is the problem with trading, is you're still going to be early and you're going to be wrong at least 30-40% of the time, and that's going to be painful for options. While stocks, I mean, think about it. If you shorted your favorite name and it's gone nowhere for 2 or 3 weeks, you're basically flat. And you might even be green. You might be green in some names. You might be decently green. But if you have options, I mean, again, think about the time decay, and if you have the wrong strikes, you make mistakes with options. You don't have good unlimited time like you think you do. Man, those things can get absolutely vaporized. So keep it in mind. All right, I'm gonna get running. Yeah, no, I mean, again, hopefully my analysis, this is what I think people just really struggle with, is they're trying to find the certainty in the market, which again, we all are, but we all have to have like this mindset of like, All right, can sentiment be out of whack? Can the market lead people astray? Obviously, that's what they're really good at. How does that always play out, right? Is it a quick trap or is it a time trap? Remember, price versus time, right? There's price traps and there's time traps. So that's what gets so hard here is people go, it has to be a price trap. Or I'll just wait, and it'll be a time trap. And that's the problem, right? Is like it's not always cut and clear like that. Because I've seen people relentlessly say, I'm going to wait for NVIDIA to retest, or I'm going to wait for Tesla to do this, and I'm going to wait for Micron to hit this, and I'm going to wait for it. Okay. Your intent makes sense. Your intent is logical, very thought out. It's very well understood by someone like myself, and hopefully yourself, you understand why you're waiting. But does it have to fucking happen? That's the problem here. It doesn't. It doesn't. So, again, you play the game, you learn, you try to take the chunks in the middles. Trying to pick the tops and the bottoms with exact perfectiveness of all or nothing trading is absolutely insanity. Layer in, layer out, manage position. Time is more important than price. Well, at times, time is, right? Time and price action are the tools of the MM, right? Because think about as time, and I'll end it here, Zeph, because it's a good, it's an interesting point. Time can create certainty, right? The longer something holds up, the more people think it's going to go higher. The longer something goes lower and holds lower, the more likely people think it's dead, right? So that's like that little like conundrum there. And it's like, well, not necessarily. I've seen, right? Like it's just bottoming. But then it can be a one touch. It can be a retest. It can be a longer time pop and chop and retest. Or it could be a V if the price is extreme enough, up and down, right? If you pull price way too far in one direction, think of it has the tendency to snap back, right? Oh God, natural gas again getting slammed. Not slammed, but the UNG down 7% almost. So just you got to be thoughtful of that, and that's where this gets hard. And that's where again, options traders. Do you think, man? Think about, and I'll end it with this: like the richest people in the world are always trying to sell options. They're not trying to get rich buying options. They buy the stock, they trade it, they sell options, right? They sell puts, they sell calls, they sell cover calls. They're doing whatever they need to do to harvest uncertainty at time and certain prices. The average person's trying to get rich, trying to pick the exact trajectory of every stock all the time, and that's the problem, right? Like, oh, I'm going to give myself 3 weeks. I'm going to give myself the end of the week, right? I'm going to buy no time options. Yeah, they're cheap. Good luck. So, hope this helps. Again, have a great day. Keep an eye on the day range lows. Know your levels. Watch the 20 days on some of these things. Again, pay attention. I'm watching the dollar, watching the bonds, watching IWM. I mean, everything seems very nervous. All it is, maybe a headline. Maybe it's the Fed minutes. Maybe the rallies on the Fed. I don't know. But there's a lot of things underlying that look like they will lead to lower prices in time. But when is time? What is that date? What is that hour? What triggers the next slam? Because if you look at the SPY, to me it seems very logical when you zoom out to the monthly, you go to the weekly, right? Hopefully people are doing this, right? Especially when you look at the monthly, 20-month is curling down. It's like this, rally back up and then kapow. Hit it, bounced, hit it, dropped. Now you're back up against it. Could get real ugly. TSM earnings Thursday pre-market. Could be interesting. Is TSM tomorrow? Give me 2 seconds. I'll confirm that. Sorry about that. I mean, that's interesting. I didn't think they were tomorrow. Let me see where it is. Briefing. TSM. I mean, I know Micron had theirs. Taiwan Semi, when is their earnings? April 20th. Confirmed. So that's not till next week. So no, not this Thursday. Next Thursday. Yeah, yep. Next Thursday, TSM. So, all right. See you guys later. Have a great day. Peace out.